Hey there everyone, very good evening to you all. Charles Hill, Frgnt, Daily Chart Analysis. Monday, 26th of January 2026, and time is just approaching 10 past 6 in the evening Milano time. Just wrapping up my day in terms of journaling and seeing how my trade has panned out. Now, as you can see, currently in US dollar CAD long positions. Let me just go full disclosure before we get into any of the nice important stuff. US dollar CAD 7 hours ago, Frgnt daily chart analysis. Let's take a look into my thought process 7 hours ago. So essentially I'd isolated a point in the market on that 15-minute time frame, and I was hoping that price would indeed break above, break structure, pull back into an area of imbalance, hoping that that would indeed occur down by that wick imbalance that we've isolated from the daily and weekly time frame. And then I was ordinarily simply just looking to take a long position from that area. As you can see to the bottom right hand chart, as well as the top right hand chart, daily and weekly respectively, price was indeed, or still currently is, trading within those higher time frame order blocks. So using smart money concepts as well as my interpretation of that in line with Frgnt mastery, I was looking for a reaction of some sort from those higher time frame order blocks. So enough of the boring stuff. Let's go back to the charts, and I'll be happy to explain how I managed to gain access into that position, why I was happy to take it, how I built the confluence, which then allowed me to trade with confidence. And essentially that is the hardest part of the game completed. So as we said, top right hand chart, daily time frame. I won't go too much into higher time frame top down analysis, but simply all we can see is we've got ample range up to that daily 50 MA where we can expect a rejection short. We can see that we're trading in a higher time frame order block where price last week closed in, and we're simply looking to find an area of imbalance after waiting for a break of structure before looking to take that position long up to our structure point on a lower time frame, i.e. where is structure. And I look to see that on the 4-hour time frame where I can see price is incredibly bearish, and is respecting that 4-hour 50 EMA. So I'm looking to hold this trade potentially to the 4-hour 50 EMA. So it's an open take profit at the moment. Let me just get rid of that. So I will show you how I took the position. Open take profit, seeing how price is going to react up at those highs, and we'll see where we go from there. As it's Monday, potentially a swing trade for the week to fill in balance up at these highs, but I'd most certainly be looking to manage that position by the 4-hour 50 EMA. Anyhow, enough of the boring stuff. So why did I take that position excluding higher time frame analysis? Well, what can we see? We can see in this area that I've highlighted in the larger circle is a price after trending lower lows and lower highs. Price, as it came into that area, it kind of stopped dead. You know, if you'd ask for my opinion, what was price doing in that area? I'll say, well, not a lot, to be quite honest. So for me, that was my guiding light. When I saw something different from that area, that's what got me interested. I know I said ordinarily I'm just looking for a 15-minute break of structure, but that wasn't enough. A 15-minute break of structure on a higher time frame could still, if you use your imagination, this is a 4-hour candle closure, we could indeed still get a 15-minute break of structure. However, if there are still hours and minutes left within that 4-hour candle, that could simply just be the candle then pushing up, closing bearish, leaving us to a wick to the high, and this would be in a position that this would be me in a position which I wouldn't want to be in. So what's the difference? What can I see within that area which allowed me to trade with confidence and gain the confluence for that position? So if you simply put a line across basic candlesticks and have a look to see what's the difference, we can see this candle here was indeed a bullish engulfing 4-hour candle closure. So for me, that indeed was the confidence that I needed, as well as the confluence to look for a position long. So on the lower time frames, what did that mean? So as we can see, price was making lower lows and lower highs on that 15-minute time frame that I shall enlarge here for you now. So again, what's the difference? It's up to us to then isolate a point of interest in the market which we determine as structure. Here, structure point. Now if I put a circle around that, and we're looking for price to break above. Now, as we said, price can break above, but if it's not within if the 4-hour candle hasn't closed, we then run the risk of taking a position where price could simply pop up and then just fall back down, back into the range. So in order to trade with confidence, what was I waiting for? So of course we had the difference here. That's a break of structure. If you look to the left, these 15-minute candles have indeed closed above the area that I determined as a structure point. It's all good news. But as well as that, just to take you back to the 4-hour candle, we had that 4-hour bullish candle closure. So that for me was a green light and a couple of very nice thumbs up to start getting in the position. So as soon as that 4-hour candle closed and the price was up here, then it's up to me to find, well, where can I highlight an area of imbalance? 15-minute, there is the order block. So as soon as that occurred, I had set a buy limit from this 15-minute order block, gave myself a sensible stop loss of around 8 pips, around about there, and this is the current position. Now, not too much else to talk about, to be quite honest. Entry criteria is something that we discuss heavily in Frgnt Mastery, as well as in all of the other free Telegram channels that we have. And as you can see, price is moving nicely. So already at 1 to 3, the trade is already locked off at break even as a result of getting around 1 to 1.5 risk to reward ratio. That's the fixed management criteria in terms of going break even, and as you can see, price is now on its way up. Thank you very much for listening. I appreciate the 6.5 minutes that you've spent listening to me talk about the breakdown. Perfect candle closure perhaps within the next 45 minutes on that 4-hour, and hopefully we can see another bullish 4-hour candle start printing in that upward direction. I appreciate your support across all of the channels. All the very best in your trading journey, and don't forget to take a look at www.frgntforex.com for mentorship and potentially joining or gaining your seat within Frgnt Mastery. Do take care, everyone. All the very best. Charles Frgnt.